welcome. This is, still Desaulniers, one of the Nison certified trainers at candlecharts.com. So thank you for the invitation. Thank you for having us as a new guest today.
All right. Well, we are excited to have you here. We always love to bring in a little new blood at TradeThirsty, and Steve, of course, Steve Nison, y'all, Candlesticks. If you've been around at all, then you know who he is, and still is one of his certified trainers. So we're super pumped that you're here, and you get 1 hour. You can hack it up any way you want. Try to read the questions, and I'll be right here listening. And if you need anything, just grab me or grab Silas. We're both right here listening. Okay.
Wonderful. Yep. Thank you very much. Yeah. So as you, thank you, Janet. Thank you for that nice intro, and thanks for the prior guests as well in this wonderful event. So as she was saying, of course, Steve Nison would be, I guess, considered maybe the father, maybe even the grandfather at this point of candles. The fact that we have candlesticks on our charts is because of Steve Nison himself. So he was a broker at a firm many years ago, and overheard some conversations in one of the rooms next door from a Japanese individual who was discussing Japanese trading. And so he essentially got all the manuals from Japan, did all his own interpretation and translation, and developed some books, and obviously those books are still available to this day. Now, of course, he's developed software, he's developed a website with all the educational material, DVDs, everything's streamlined now, of course, as well. So because of him, we've had the benefit of learning the legendary methods of learning and understanding how to use candlesticks on our charts. So thank you, Steve Nison. And I've had, of course, the great fortune and benefit to have been one of his students at one time, learning his stuff, buying his software, and then got the grateful offer to work for him now, and then have him as a straight up mentor. So this is all about understanding candlesticks, and people may think they understand candlesticks, but there's a whole world of candlestick knowledge out there that most people don't understand. But certainly we're going to start with the basics. Some of you are probably familiar with it, so hang in there for those who are quite familiar with candlesticks. But I think this is going to be really still enlightening for those who have some basic understanding as well. So let's get started, because this is all about the secret method for success with candlesticks themselves. So of course, as always, there's a disclaimer that we'd want to say, of course, in terms of risk with securities, futures, forex, and options, and so on. So if you need to understand this a little bit better, certainly go to candlecharts.com/disclosure and get a better understanding. And so there I am, a Nison certified trainer, got trained directly from Steve himself. I'm one of, I think, only about 3, maybe 4 people that have been certified through him over the years. And I also handle his tech support for the software that he developed that was an identification software on your charts to identify proper candlesticks, because there's that misinterpretation, of course, as well. So again, back to the training part, and knowing and understanding candlesticks correctly is critical. Knowing where they belong and in the context as well is critical, so that you can have the best possible entry, exits, included management of those trades, so that you have the most and best success as always. So the trading world has grown and grown and grown, and that's why events like this and these kinds of platforms exist, so that we can do things on our own, invest on our own, trade on our own. And the more knowledge and proper knowledge that you have, then obviously the better decisions you make, the better confidence you have, naturally the better trading success and results you have as well. So that's what it's all about, right? And that's what we want to be able to do for you. Am I an active trader or just to teach? No, I'm absolutely both. When I first started, just so you're aware, I was a trader on my own. I learned I learned charting and trading with candlesticks to begin with, but was never taught what they meant. It was a matter of just somewhat of an automated system saying when to get in, when to get out, and they happened to use candlesticks. I was provided a manual on the hundreds of patterns that were out there, but no interpretation, no context, not how to use them, when to use them. And it wasn't until I sat into a similar webinar like this with Steve, where I suddenly realized you could probably narrow it down to about at least 12 to maybe 24 candlesticks that were probably the strongest, most powerful, most understandable, and then use them in a specific context to get the best success possible. And that's when I started to really understand it. And since that time, over the last 5-6 years, have gone a multitude of additional information to better use them and trade with them. So I'm definitely an active trader as well as an educator. So thank you for that question and certainly clarification. So here's a testimonial from Carl, and again, based on the education, getting the correct education, simply saying, I was told this was a bullish engulfing, and in fact, had I traded this, I would have probably lost a whole lot of money because it really wasn't the correct call on the candle. While it looks bullish, it's white following a black real body. That is actually in proper context incorrect, and also based on the prior activity would not have been a bullish activity. And I'll show you some of this stuff in a few next slides coming up as well. So that would have been devastating loss for this gentleman, and of course it's happened hundreds and hundreds of times with other clients as well. So the benefits of candles that can be used in any market, it doesn't matter if it's forex, it doesn't matter if it's futures, etc., ETFs included. They're quite simple to apply, especially if you don't overthink them and understand the context. Once again, it's all about safety first in trading, so it's best that you understand and put them into context and don't overanalyze as well. And then, of course, they're also, particularly, they've always been used for early reversals for entries, but also been used for exits as well. So they're traditionally, like I said, for reversals, whether they're coming as a short trade or a long trade on a bottom or a top, but they can also be considered useful for continuation trades as well. So as mentioned, any market, but also any time frame. I get this question a lot in terms of, can it be used in my Indian market? Can it be used in the Asian market, in the UK? It doesn't matter. If you have data and you have a chart and you can put a candlestick on it, it can be used, of course. So it can be used anytime. It doesn't really matter. It all applies any time frame. Obviously, if you're in a 1 minute, 3 minute, 5 minute time frame, things are happening much faster. The context is that much more important. But again, any market, any time frame, it all applies. It's that basic. So let's look at how easy this can actually be to be understood. So here's a Japanese proverb. If you want to cross the river, you must first build a bridge. So once again, understanding, getting the education, and then putting it all in context is what makes the difference. Just because there is a bullish or a bearish candlestick on the chart does not mean it's an automatic buy or sell signal. It must be, again, placed in proper context, and consequently getting the best result ultimately as well. So is it true candles are easier to read daily charts versus intraday? What do you recommend for time frames for day trading, swing trade? Well, again, that depends on your speed of how you look at charts. I can't really recommend that necessarily. If you enjoy 3 minutes or 5 minutes, you'd want to probably use 3 charts, maybe a 5 minute, maybe a 15 minute, a 60 minute, just to get the general idea of the trend. It's a matter of trial and error at this point, John. So I think it'd be best that you just kind of go along with it and give it a shot, see what seems to work best. But any time frame works. It doesn't really matter. So candlesticks will gauge the emotion. So this is always that funny thing about you want to trade and you know it's emotional, and you can see if you ever watched video of the floor traders, how emotional it can be, the yelling, the screaming. While things are much more automated today, you're trying to keep emotion out. So the candlesticks are gauging and telling you what's going on out there, who's buying, who's selling, how many, how much, how hard, how fast in terms of force. But you're trying to make a tactical decision based on someone else's emotions, trying to keep yours out. So you're looking, that's why you look at technicals. That's why you're looking at a chart and not listening to other people. In fact, I've gotten to the point now for the last several years, I don't even listen to the news. I don't watch anything, don't read anything. I purely let the chart tell me what's going on. And I'll give you a good perspective of this coming up lately, or coming up here shortly in the next couple slides. So who's winning the battle, the bulls or the bears? That's the bottom line. You want to find out, again, in the context, who's in control, not only before, but also particularly right now. So for those not quite familiar with the anatomy of a candlestick, maybe because you're using bars, you've got essentially what looks like a candle with wicks, if you will, shadows above and below. So on the left-hand side, we have, if an older chart is not colorized, it might be white for a bullish candle, but it can also be green on your chart as well, and that's called the real body. And so you can see here the closing price versus the opening price essentially constitutes the upper and lower portion of that real body. And then, of course, then you have the high and the low. But then on the other side, on the bearish side, you can have a black or a red candle. Again, the open at the top, the close at the bottom. And as I mentioned, the shadows, or sometimes referred to as the wicks, since they are candlesticks, would be where the upper portion is the absolute high versus the absolute low, right? And that's pretty basic in terms of just the anatomy. So let's take a look now and keep going. So candles like a bar chart shows price, but also shows the force. And that's an important aspect because it's going to tell you a lot about where support resistance lines are, but also targets in the future as well, particularly context included. So that becomes quite important. So when you look at this, who's in control? Well, obviously, that's more of a bullish candle, so you'd be thinking the bulls are in control when something that large, that kind of force is present. That would be on the bearish side, who's in control, based again on the black or in case the red candle as well, and again, based on the size and the force. But when you see something like this, who's in control? What do you think? Since it's dead in the center, the open and the close are in the center, and you have a high and low with a fairly large range, that's fairly neutral. So again, context within that makes a difference as well. So it tells you a lot about not only the force, but also who is in control at the time. There seems to be a level of indecision with that right chart pattern right there. So when does it become black or red or opens? Well, again, it's at the end of the candle pattern itself, it becomes bullish. If it will finish, the close is higher, it will be white or green. If the close is lower than the open for that particular session, whether it be a 5-minute session or a daily session, then of course it becomes black or red. So we're just going to use some simple bullish white candles here just for an example. So candles revealing the force behind the move itself. So you can see, for one, the simple size of the candles are smaller with upper shadows. Then it gets a little bit bigger, and then we have a much larger force. So this is increasing in size in terms of force, and all of a sudden then you have what we would consider a doji formation. So note also, it went up, meaning they bought and went all the way up, brought price up to here, and they came all the way back down to there. And the closing price and the opening price were the same, but they also matched the closing price from the previous session right there. So they have the same closing prices right near the 1098.50 area. So what are these candles telling us? Well, you've got a strength of force coming to the upside. Then they try to push it higher, and then they get pushed back down and close at a similar price from the previous session. Well, then you've got additional undecided candles, if you can see. This is a fairly undecided candle. This is even more undecided, meaning that they try to push higher, and they get pushed back down, closing lower, particularly in the lower 20% of that whole candle, and then they start to show a sign of much stronger reversal. So one, the size makes a difference, and where and what kind of activity with the shadows and so on make a difference, and eventually you get confirmation that it's bearish, what it would call a bearish engulfing candle right here, and eventually you got the short trade going for your side. So here again, similar pattern, you've got a very, very strong bullish pattern. So how many of you have had this happen before, where you think everything's extremely bullish, you decide to get in, and the whole thing reverses on you at that exact time? Happens to a lot of us. It happened to me a lot, and that's what made me search better education, better understanding what was going on in the charts in terms of emotion, tactical positions, context, and who was in control at the time, and in terms of trends included. So understanding the candles made it very, very clear. So very powerful green candle, a small upper shadow. I'm going to say small because relative to the range, the overall range, it's not that big, but it's telling you something, that maybe something's going on where they're getting rejected by the sellers or the bears. And sure enough, the next session, once again, as I mentioned before, the closing price is almost the same, and there's a little bit of a push lower with the lower shadows a little bit longer, and eventually you get a better confirmation to the downside where things race lower, where it became very bearish, and ultimately even more bearish as each session passed. So there's that doji, as I mentioned, and then the result. Same thing here, doji hinting that maybe the market is tired. And it's not just that doji, it's also things that were happening prior to that. So you got probably a first glimpse of that right here, and then a mild to moderate sell candle, a bearish engulfing, if you would call it here, because it's engulfing essentially the real body from before. But its size is not that great, but it's equaling the size from before. The push later from the bulls or the buyers afterwards is mild and moderate, and again a little bit more selling. So the buyers keep trying to step in by opening higher opening higher, but they just are not really shoving higher. Even though they're opening higher, they're getting rejected, and then you've got a level of indecision now, and that's where things start to turn around. They really start to race down, and then what was in fact a level right here of support, at least at the time, that was holding all those prices, suddenly became a manhole where everything started to fall through. So all of this was context, and one candle after another was giving you clue after clue after clue that there's just fatigue here. They're trying to push higher, and they just can't seem to do it. And so you knew session by session by session, something was building on a more bearish side at least, and sure enough confirmed just a few sessions later. So being able to avoid bad trades or investments, I'm sure a lot of you have had bad in trades or bad investments and maybe don't even understand why. I was one of those individuals not so long ago. And again, when you start understanding what's really going on, what the candles are really telling you, then it becomes much, much clearer. This is one of the reasons why I don't trust the news, because to me, you can trade the news. There's ways to trade the news, and it's very successfully done. I just don't want to have to rely on it personally for myself. I would rather let what is already going on in the charts tell me what's going to happen next, or at least what I think is going to anticipate be happening next. So example would be I bought on the good news, and then I looked at what happened. This has happened before. You listen to somebody on TV, they tell you to go long or that it's bullish, and then you decide to get in, and everything starts to go the other way. It's all based on perspective and context, and again, whatever their perspective might be different than your perspective as well. So most of you have probably heard or at least seen a hammer on a chart before. You get a small real body with a long tail on it. That's the shadow. And so the hammer must be with these kinds of criteria. A market that's in a downtrend already, so this is usually an early sign of a potential reversal. It's a small real body as mentioned earlier. The shadow must be at least twice the height of the real body. And I'm going to say, again, based on force, the larger in terms of height from high to low, the length of that lower shadow will certainly add to the strength, especially relative to what's been happening before it happens. So here's case in point. Trend is coming down. Short-term trend coming down. You've got a lower shadow here where there's an early sign of maybe a reversal. This is where a little bit of a breakout occurred right here. They come down right over here with a hammer formation. So again, size. That size is moderate in size. It's certainly not overwhelming the size from the prior selling candles from before, but certainly takes something in your head saying, okay, I'm going to make point of this, and maybe they're going to be looking for a reversal, especially at a place where there was a breakout from before. Sure enough, they start to race higher, but they run into resistance. They come back down, and this is going to be key. Every candle became more and more evidence along the way, meaning this was an early sign of maybe a reversal. This was a good move on the next candle. This hard sell was rejected with a lower shadow and immediately with buying. So despite the large selling area, they were not able to break free and below that level. They went in undecided. They tried again, lower shadow, and then an even bigger hammer, larger in size, larger than the previous candles, larger lower shadow, and more so, what else happened? The real specific area here was that it dropped below everything and then came right back again. So it snapped back. We call this a Kraken snap. So the size, where it happened, how it happened, said this is a reversal time period. And sure enough, that's exactly when it occurred. So having a little patience, having a little understanding of the candles, when to buy, looking for the clues of the candles themselves, told you pretty much very, very high probability this is now time for a reversal to the upside. Here's the same thing again. You've got hammering out a base. So there's a hammer doji kind of combination. You've got a hard sell coming on the downside. They flush it lower. Here they race up on a nice reversal. That candle is pretty strong and pretty high in force relative to previously. They come back up to a form of resistance and breakdown area. Then they start to sell again. They go hard. They slow down. They go hard and hard, but again, cannot surpass and go through. And they immediately come back with a bullish engulfing at that exact level where they hammered out the bottom. This became a classic perfect signal confirming the hammer in terms of support on good strength and force with a strong bullish candle, and away it goes to your next targets above. What time frames do you use on day trading? Or candles valid on On 5 minutes, yes, any time frame, again, any time frame, 1 minute, 5 minute, 10 minute, 15 minute, doesn't matter what the time frame will be. They're valid anywhere at all times. Obviously, things are just happening faster. It just is much quicker. So imagine if this was a 1 minute chart, each one would be, these candles would be 1 minute long. So you'd be making some pretty quick decisions in very, very, very little time. But if that's your speed, if that's your game, then more power to you. So doesn't matter what time frames, whatever you're using, quite frankly. So there's that support area I mentioned. There's the reversal confirming it, and away it goes. Here's a Gravestone Doji. So this is going to be interesting in terms of, which three prices of the session are on the low. Well, you have the open and the close as well as the low all in the same place with that large upper shadow. So they essentially, they opened, they raced up, they came back down, and then they closed at the same place. That's what happened there. So let me show you on a chart now. So there you have, if you, again, in perspective, if you're seeing bullish candle and all of a sudden you're seeing upper shadow, and levels of indecision where they seem to be fighting and struggling and grinding to go higher, and then they start to drop, and then you have a pretty decent sell candle, another one where they, again, try to buy back in, they grind higher, and then they get this. They can't quite seem to get past. They try to buy, and they come back down. In fact, this one closed below the previous session's close. Those are somewhat ominous signs right there. That's why they do call it a Gravestone Doji. Death may be coming, in other words. So sure enough, there's a falling window or a gap lower, and off to the races to the downside based on that signal that occurred at a resistance level with other clues, as I mentioned before, showing levels of indecision and fatigue in the market as well. So if you exited from a bull trade, you would have avoided, in this case, a 15% collapse. So again, see how if you can understand just a few simple candles, the context, what's happening at the time, understanding what the interpretation is and what people are trying to do here, then it makes sense to trade that way, and your results and success will increase. So fortunes are made by those who can call the next turn. Well, it can be pretty tough at times to really, truly call a top or a bottom, but like I said, and I showed you a few examples already, how it can be done. You can see it. You may not catch the first wave, but certainly if there's confirmations, and the stronger the confirmations, the more likely you will step in. Now, again, I will show you additional examples coming forward here in our presentation today. So early reversals, being at the right time at the right place. 2 exits back, well, hopefully this is you, and hopefully going forward, this will not be you as well, because you'd hate to be there. So you remember the 2007 crash, and then ultimately in March of 2009, there was a reversal. Well, could you have seen it? Could you have believed it or predicted this movement coming? Well, I say yes, because it was, all the signs were there leading up to it. This is a weekly chart now, and this is the E-mini at the time. So you're seeing, again, sharp reversal here. They grind up. That's fine. And then they start to show signs where maybe they're looking to go lower. They grind up again. They just can't seem to go. Again, hard sell, another hard sell there. They grind back up again because the overall trends were still to the upside. So buyers are still buying on dips. They're finding locations to buy based on support levels. They managed to go up. Fairly bullish candles coming in, again, undecided, doji formation, and then another hard sell. And they can't seem to ever fight back. And again, they come back to support levels right here, and this is where everything started to roll over and go south. And there's that large support area right there. So if you didn't catch it at the top, up here, then you needed to start looking here, and of course, the confirmation ultimately was right here. So they came down pretty hard. They managed to grind back up, and again, despite some of the bullish activity, they were unable to surpass this very bearish territory that was now established, and they started to sell off with a bearish engulfing, and every support level thereafter started to break down, and of course we recall some of those large declines. I remember watching this stuff on TV and just shaking my head going, this is unbelievable. I've never seen anything like it, where selling was in the numbers that they were selling in at the time. Now, as, of course, time had passed. Again, this is a weekly chart. This is 2007. Now you fast forward to 2009. they started to really be oversold in this vicinity, and people were calling this as well, it's time to start buying, and some probably did, and sure enough, you can see where they did. Lower shadow starts to show some buying where they start to buy at certain levels. Bullish engulfing right here where they attempted again. They started to sell off. Again, another larger lower shadow. They bounce back up a little bit. They start to sell off, but not near as rapid. The volatility had declined substantially. And then right here in March, where you had a very strong bullish engulfing after all of the tapering. So you think about how they call it a dead cat bounce in a sense. This was the hard fall, and then you see the little bounces coming in. This was the ultimate reversal, and the real confirmation was when they came back through 600, and that was off to the races. The next confirmation came up here when they finally broke out once again. So if you didn't catch it, some of it here early on, and you didn't catch this, then you should have been able to catch it by the summer just a few months later. So someone's saying they have trouble staying in a winning trade. I guess whipped out, I suppose, on a previous swing. How can these signals keep me in the trade? Well, you either need to be kept in the trade, or maybe it's best that you get out of the trade. And again, understanding the context, the candles again, what's happening. Once you start understanding what the candles are telling you in terms of the psychology and what people are doing in the trading world, and who's in control at what levels, meaning are the bears or the bulls or the buyers or the sellers in control, and where, then you have a much better understanding of what to do, whether you should get in, not get in, when to get in, when to get out, take profits versus exit altogether, and that's part of what I'm trying to show you today. So that's what happened in 2007 and 9, and what's happening now is something similar. So you guys know what this day was right here, and that breakout, and how the market now suddenly went very bullish. So you notice the markets were kind of going sideways for the longest time in 2015 and 16, and all of a sudden there was a massive breakout and everything went massively bullish. That was the election day. That's when Donald Trump got elected. So months prior to that, the whole setup was already developing, telling us this could be a very bullish environment. So they were neutral for the most part. There's your hammer reversal right here. They came into a resistance area, pushed up, could not get through. They only retraced partially. The sellers were not driving things lower like they were once before. Got a very bullish candle right here. They broke out above that resistance level. And again, despite the hard sell candle right there, that red candle, they held that ground really, really well. Then look at all the small little candles in here, just waiting and waiting for an opportunity. They were just sitting there, and there's really no force to the downside at that point, except for that one red candle, but they held that level quite nicely. When the election occurred, there were sellers that stepped in aggressively, but they came right into an aggressive buying center based on that, what occurred back in July. They immediately reversed it, if you recall how aggressive that was, and it was off to the races after that. It's been bullish ever since. So that was, I wouldn't say fully predictable. It was an extremely volatile day, but the pattern and the setup was there. And if you didn't listen to the news and watch the news, you would not have been bothered by that one bit. So now, would this be considered the 2018 crash, or maybe are we due for another one again? So take a look at that. Again, the candles, very bullish, very bullish, very bullish, very bullish. And look at how steep things are going. I tell people this all the time. If I was running up a hill, how tired would I be by the time I get to the top? If this was a plane and I fly my plane straight up, at some point that engine's going to stall. So despite, again, how bullish this all looks, and look at that last candle, and then look what happened the next week. A huge sell-off and another big, large sell-off the week after. Now, again, based on breakout areas right there, this was a massive support area near 24,000, and this is where they start to chop around. And again, based on a massive sell candle right there, they held anyway. They managed to support. They retested and support again with a long lower shadow, almost hammer-like. They did it again a few weeks later, and then they were back up to the top. Now, again, we're back to the same thing of not near as steep, but an extremely aggressive bullish candle. And then this past week, where there's a coincidence now of an end of a week, end of a month, and end of a quarter all simultaneously for the month of September. it's going to be very interesting to see what they do, because we're at a critical point, I believe, right now, despite, again, the fact that the trends are all strong and up, right? That this now is at a resistance level where they could not get through before. This is where the bears stepped in and said, you're not coming into my territory above 27,000. So the bears took over for a period of time. And now the bulls have come back. So what took 2 weeks to knock out has taken most of the year, because this was in February when that happened. It's taken most of the year to get back what they lost in 2 weeks. So that's a little bit of a fight and struggle. In fact, one could argue that based on the selling that occurred over here, that's even faster. So it's going to be really fun to see what's going to happen here. At the moment, very bullish in nature for sure, but certainly they've not been able to penetrate 27,000 to this point, and it seems to some degree a little extended on the charts at this time. But that'll be fun to see. So the market is manipulated. I'm not sure who would be manipulating this exactly. I'm looking at a chart. I have no idea what's going on, and I'm reading the chart, and the chart says this is a long position to consider getting into. It's a matter of waiting for the signal, and sure enough, the signal was there, and it was a bullish move from there, regardless of whatever's going on, wherever you think it's going on. Okay, so I'm going to carry on. There's a few other questions coming in, but I think I'm going to hold off for now and answering some of those until maybe a little bit later. So here again, you've got another sharp move to the upside. There's a hammer here. They come off a moving average in blue here. They race up, they gap up, and now all of a sudden they seem to get very, very tired. A little tired, a little more tired. Again, they start to drop a little bit, but tired. They try to break out, they cannot. And then the following window pretty much confirms all of this indecision and fatigue that appears to be appearing in the markets. At that point, that confirmed the decline in the markets. So that falling window at 700 confirmed the top because of the bearishness of that move to the downside. And had you waited, like some signals occur where people wait for crosses, which is called a dead cross here, where the one moving average crosses below the other moving average, in this case a 20 below a 50, then you could have gotten in over here versus over here, and it would have been a difference of $50, obviously, based on one trade over the other. So again, the benefit of understanding candles is that early entry, but also perhaps even early exit or more timely exit as well. So candlesticks will give you an early reversal signal so you can exit before the market goes strongly against the trade. That's, again, the context and understanding the candle patterns themselves and what they all mean. So candlestick strategies for greater profits. Take a look at this. What do we have? We have a chart with candlesticks at the top, and we put a MACD because this is a fairly traditional strategy, yet simplified and simple. Probably doesn't exist near as much as it used to, but certainly it's still done to this day. It can still be quite profitable in nature based on what the MACD was originally designed for. So you have a hammer at the bottom, and then you have a retest a few sessions later. So you've got the hammer, much larger in force compared to what happened before. You can see the indecision at the bottom. They start to break higher. They come back and they retest. They get you a bullish engulfing to confirm that support area right there. So the entry could have been in here or maybe on the confirmation a few sessions later, but you can see the bullish move that occurred. At the very end, at the top, you do have that doji at the top. That would have been, again, a sign of fatigue, maybe some indecision, a time to at least minimally take profits and maybe get exited altogether on a stop loss as a remainder, or you exit altogether based on the strength of the move that occurred before. So you exit there from $3.95 all the way up to $4.47, and you profit at a $52 per share clip on that trade based on the doji and the confirmation trade. Now, have you traded on this breakout candle right here based on the crossover of the MACD? The difference would be your entry would have been at $4.18, not $3.95. Still exit at the same place for a profit of $29. So significant difference in profit from one consideration over the other consideration. So that's the difference there, $23 per share profit. And even if you didn't time it quite right, maybe it's a little less than a $23 difference, but nonetheless, you can see the difference, understanding the candles, understanding the psychology and emotion and where it's happening and how it's happening you don't necessarily need additional indicators, although many traders will go away from just using candles themselves and maybe use one or two other indicators as an added confirmation along with perhaps their support resistance levels and other things they may be looking at as well. I try not to use anything else, and if I do, they're for specific strategies like maybe reversals based on divergences on maybe the MACD or the stochastics, things like that. But for the most part, I'm looking at a clean chart for the most part, just candles and candles alone, just like the Japanese traders did many years ago and provided them with a legendary status that has allowed us to understand candlesticks today. All right, so let's carry on. So funny little cartoon where these folks didn't use candlesticks correctly, and consequently they won a few extra coins for change. All right, so let's look at another example for entering a new trade. So we've got what looks fairly neutral side to side from left to right with support levels and resistance levels from side to side. But if you had a declining trend, again, part of the criteria for a hammer is that it's in a downtrend. Sure enough, you're going to start seeing that there's times when buyers tried to step in with a lower shadow. They bought in for a period of time, then they got hammered down again. They tried to buy in again. So these are pretty forceful moves to the downside. And these tend to, of course, become oversold fairly quickly. But what happens after all the selling, and again, another lower shadow, is they closed down below and they opened all the way up here, showing the strength of the buying. They got pushed down, but they came right back again and bought back in. So that showed a strong area right there with a hammer. It doesn't overwhelm the size, again, the high and the low, the full range. This does not overwhelm the previous selling candle, but it's a sign saying something's going on and maybe I need to pay attention. If you're sharp, maybe you get into a short-term trade where you can actually take profits along the way. But the real area, I think, that gave you the best clues of all was a confirming area to the right of that. So as we advance, we notice there's a support area, candle after candle after candle. So this is what becomes interesting. This is important to watch out for, so you keep watching. Then you see a massive sell candle that immediately gets stopped in its tracks. So if that's truly forceful, it's going to break down, and it doesn't. So that means that this is powerful. Buyers are stepping in, and this is an area that's being defended by the bulls. They come right back with a little bit of buying. They gap it up on strength. They come back down, again, get pushed down, but get right back up. And here again, same thing. They get gapped down, they come right back up. So this is a hammer followed by an inverted hammer. So this to me was the strongest clue of all, with another clue here and another clue here. So 3 strong clues, with the strongest one most recently. And again, despite a moderate attempt to sell, they came right back where the closing price and opened up the next session up here. So if you didn't buy in here, you would definitely have been buying up there. And away they went into target areas above. So targets could have been considered based on former highs, and so that would have been how you would have chosen targets at that point and exited completely or partially at that point as well. So let's look at the opposite of a hammer, and it's a shooting star with the upper shadow, again, at least twice the size of the real body, so it's just the opposite. But again, in this case, the market must be in an uptrend, so now you're looking for the reversal from a short side. So there's the first sign of a very aggressive large range shooting star, but it happens on a window and it happens on a breakout. So it's something to really watch out for. Is it bearish? Yes, it's very bearish because they got shoved back down aggressively. But because the trend is still up, there's still some strong buying, they attempt once again to push it up. They gap it up, they get pushed down, they get rejected slightly there, they gap it up right here on the open, and then they get pushed down. That was your clue right there that things are looking a little dicey and a lot more bearish than ever before. They got pushed down here aggressively, and here they are again, and now you've got what's called a bearish engulfing, larger range than previous candles, and then of course you can see what happens thereafter. But it's all about the candle and then what happens in context, and then what additional bearish signals might be developing, or weakness anyway, in buying, and then therefore you make a decision to go on the short side. There we go. Okay, so here's it again. You can see to the left, you got what became a resistance and a drop, and then you see a shooting star right there, right at $111, a place where The previous candle was very aggressive, very bullish, and they tried to go through and got rejected. Not earth-shattering. Again, the range of that candle not overwhelming the previous, but then what happens afterwards is the level of fatigue and the feeble attempt to try to break out from the bulls. The other thing is, if those of you like trend lines, you got a trend line right here that eventually got broken down again with a falling window like we saw in an earlier example, confirming how bearish this really truly was developing over the last 4 sessions. And off to the races they go to the downside on a short trade, again, based on resistance, a shooting star, and then confirming candles 2 to 3 days following, and particularly with the falling window thereafter. So there's would have been one target and then additional targets to the downside that could have been considered in this trade. So I talked a little bit also about bullish engulfings and bearish engulfings earlier, and again, so bullish would have to be in a downtrend first, usually and ideally a smaller real body, and then a larger white or green real body that engulfs the real body from before. If it engulfs the whole range, even better, that's even stronger, and then you're looking for some kind of reversal, and it's just the opposite for the bearish side, black or red candle, again engulfing the real body, even better if it's the whole range, and that's a signal. Again, context is everything, as I mentioned before. So here is a bullish engulfing pattern right there, very large, slightly larger than previous candles, but where is it happening? It's happening right at a support area from previous. So they've defended here, again, despite hard selling. Despite hard selling, they tried to buy in 2 sessions before. They gave you a bullish reversal, and then they chopped around some. They came back right here, confirming that exact level with a strong, strong candle. And more so, as I even mentioned once before, what also happened here? It opened below the support on a gap down and immediately reversed, almost like it snapped back in on a rubber band trampoline effect. That was even stronger in terms of confirmation for that bullish engulfing. So again, the context and the patterns themselves, when they happen, where they happen, makes all the difference in the world. So there's your targets up at the above. That would have been a nice gain on this. Okay, so here's another bullish. This is a bearish engulfing now. So this is where the range of that bearish engulfing may not necessarily be all that overwhelming or all that powerful, but you have a trend that's been going for a while. You have indecision, a level of indecision right there as well, with now a bearish candle. Now they do sell off, but they immediately start to buy back in, making their way back up. And then this is again where indecisions develop. They showed us lower shadow here, bouncing back, showing early signs of selling, indecision, even stronger indecision with more selling, and then everything started to fall apart from there on a confirmation of that bearish appearance sessions prior. Targets would have been directly below. Again, significant gains on that trade. More targets based on previous candle patterns, of course, as well. So again, based on information and being wrong information or lack of information, super critical to make sure that you actually have the correct stuff. Otherwise, it's essentially what's building the bridge for you to avoid financial abyss. So making sure you have the right information as well as using it correctly will make all the difference in the world, and interpreting, of course, and education consequently is key. So having the candle charts is one thing. Understanding them correctly in proper context can make all the difference in the world, giving you a solid foundation for making the kinds of money, whether it be for a little bit of spending money, if it's retirement, whatever, it's college, whatever it may be, will make all the difference in the world. All right, so here's a power concept that we can sometimes share with our clients. Improve success by combining candlesticks with any or all fundamental or technical indicators you now use. Now, I know that even like Investors Business Daily, they use candlesticks, they use candle charts, they use technicals, but they combine it with fundamentals. They do a brilliant job. They have a system that they use, and they've got checklist criteria. Again, myself, primarily candlesticks by themselves, just as the Japanese traders did before, because I wanted to try to duplicate what they did, and I am understanding now how they managed to do it. It's brilliant, quite frankly. Others will, like I said, use MACD. They will use other indicators like MACD or stochastic, sometimes Bollinger Bands or combinations thereof, to give them whatever strategy, whatever system they're currently using, to then add to that for greater success going forward as well. So here's another bullish engulfing pattern at the support level. So you've got, again, a hard sell on the left side, really hard, and they manage to hold and bounce. They do it again, hard sell, and they go hard sell with the lower shadow, they bounce. They go pretty hard sell again right there, and then they stop, and again, gap up. They go undecided, again, rejected of the support area, and they go really hard right there, and then it's off to the races. All the while, this was declining, pushing pressure. The selling pressure was there, but the buying pressure was coming up from underneath, and they popped to the upside. So again, context, where, how, makes a difference. So being prepared is everything, right? He who is well prepared has won half the battle, and that's pretty much true. You know, back to education, understanding. At that point, once you have an understanding, you have a level of confidence of what you're looking at, you can make better decisions thereafter. So after that becomes what's super important, right? All right, so then in terms of trade management, did you know the exact same candle signal can be used to not only enter a new trade, but at other times also exit, and at other times perhaps do nothing, meaning that it's maybe essentially it's not looking like a sell, not necessarily a buy, it may be just a continuation pattern, and you just stay in the trade and continue and continue and continue. Like somebody said earlier, they have a hard time staying into something. So that can be used in trade management as well. So in this case, I give you a small example. Which is a better trading signal? The one on the left, which is a bearish engulfing pattern, which is massive in size, or the shooting star, slightly smaller stature on the right? Which is the better trading signal? This is where context makes all the difference in the world, because one could get fooled. You're right, the one on the left, the large bearish engulfing pattern, is in fact super powerful. And you think that that would be the right choice. So it drops, but the thing is that you've got very little room for profit. So your stop area technically should be up here, profits down here. That's a lot of risk to give up for only a small amount of gain. But if you wait patiently and you wait for that smaller shooting star that actually overwhelms some of the prior activity, and it happens at that exact highly bearish level, then the trade becomes much better up here, and that signals much better. One, you're getting confirmation of resistance, but also it's very bearish territory, and then you can take advantage of it there. So understanding, again, as I mentioned before, the candles themselves, where they develop, the context, and then just understand. When you understand, then you can become more patient and much more confident in your decision making, and not jump to conclusions or jump in too earlier or even too late for that matter in most cases. So in this case, the shooting star was actually truly the better signal based on where it happened and how it happened. So to know where you stand is as important as the candle pattern recognition. So this is, again, you must learn to properly use the tool. So again, if you got a hammer, you know, how are you going to use it? Are you going to use a wrench correctly, a screwdriver correctly, and at what time? That makes all the difference. So how you use the candlesticks, as I mentioned before, is critical. So our educational journey begins with only one step, and that's just make a decision. Start. If you don't know candlesticks, then learn. I strongly suggest you get some at least basic understanding to get a better idea of what the psychology, emotion, and the force of the moves are at all times. If you already have some basic understanding, then I urge you to learn more and get more, because there's plenty of it out there that Steve has been able to put together over the years in his books, but also his webinars included. But we just want you to at least get started with something if you haven't done anything at all. And if you already have, then take another step higher, faster, to learn even better the candlesticks, because you may think you have an understanding of them, but I'm going to probably guess that you don't. Even I thought that I knew them well, and then I'm still learning the nuances to this day. And that doesn't make it complicated. That just makes me a better trader all the time. It helped me be a much, much, much better trader 5 years ago, 6 years ago, and every year it's gotten better and easier and more recognizable and faster, and decisions are easier and better than ever before. So we've got a site, candlecharts.com/TradeThirsty, for an offer that we have for you today regarding the education in understanding candlesticks better. So it's part of the training. You can watch it, since it's streamed, you can watch it anywhere from any computer, anywhere in the world. No need to travel, no need to put a disc in. You load up, have internet access, bring it up, put a browser. You have a 1-year access to this at all times, anywhere, as I said, whenever you want to. So these are express strategies, again, that will work in any market or any time frame. I was getting these questions still in terms of, can it be used on a 1 minute, a 5 minute? It doesn't matter. You have candlesticks on your chart, it will work. It's identifiable. Just realize that the lower the time frame, the faster the pace, the more important you understand not only the candles, but the context within they are occurring as well. So again, candlecharts.com/TradeThirsty for that offer that we have there. So here's Mike W. saying, if I was writing a book on how to be a trader, the first thing I would say is learn from Steve Nison. If you don't, you're going to lose 10 times the cost of an education trying to learn these things on your own. And it's true. Again, I was put into the position of learning how to trade some years ago. We had candlesticks, but they, and a few things like hammers were discussed, and they were talking about hammers were usually absolute reversals, which I've learned later that's not really the case at all. Again, it's based on context and how they're happening, because it can happen just about anywhere, and they're not necessarily that strong. So again, it's context is everything. And as you learn more and understand more, it becomes so much clearer. So, and getting to understand some of the key, say, maybe 15, 18, 20, 24 signals makes things so much more simplified in terms of not over-interpreting and just making things as simple as possible. So I was able to do it. You can do it as well. Anyone can do it. I'm not that brilliant of a guy, and I managed to do it. I never thought I could trade, and this is some of the funnest things I've ever done in my life. So we have an offer, the Candlestick Express class, giving you all the access to what I just mentioned before. It's regularly $295. We had lowered to $149, but for this event, we're making it $99 right now. So go to the candlecharts.com/TradeThirsty URL link, and you'll have access to that immediately. All right, so let's see what kinds of other questions I didn't get a chance to answer. We've got looks like a few minutes left. Let me see where we are. So we talked about the time frame again, what time frame to use on day trading again, are the candles valid on a 5-minute time frame? So yes, yes, they are valid, as I mentioned before. What time frame really, if you're day trading now, then there's no reason to change what time frames you're using. It's not going to matter. It will work. In fact, I will challenge you that it's going to work even better when you understand candlesticks and what you're doing now. If you're using additional indicators, some indicators work much better than others, depends on what you've got, but certainly, generally speaking, you can find a way to get additional and better confirmations of your trades with candlesticks and whatever you're currently using with indicators as well. So we talked about trouble staying in a winning trade, understanding the signals, the context, where they're placed, understanding the force of those candlesticks as well will help you not only get in, when to get in, but also when to get out. I think that's one of the hardest things. It's pretty easy to just put a trade on. You can do that every second if you want, but knowing that that's the right kind of trade, high probability trade, is another thing. But also once you're in and it's a winner, what to do with it now. The management, but particularly what are your targets, and are they reasonable targets, and do you understand what will happen at those levels at that time as well? That's pretty critical too. Let's see, weekly YM has an inside bar or Harami, which can be a turning bar. Yeah, so Harami is an inside candle. Where it's positioned relative to the previous session can make a difference in terms of its strength, but it's not so much a reversal candle per se. It's more of a hint. It's more of a maybe I need to pay attention. It's not a true reversal candle by definition, like I say a hammer, bullish engulfing, or bull sash for that matter, and things, piercings and dark cloud covers. But it is certainly a relatively strong hint, and the stronger the candle is at the time, then the stronger the hint is. So yeah, good point there on the Harami for sure. So thank you for raising that to the attention of myself and others as well. Let's see what else we got. You've been explaining charts very well. Best I've heard. Well, thank you very much, BC. Appreciate that. When some people say void on a chart, what does it mean? Good question. I'm not sure. I don't think I've ever heard void before, so I'm not really sure what that means. So do I use moving averages? Well, I'll tell you, when I do the recaps, we do a recap every day to our members regarding some of the major indexes going on. For their benefit, I have a chart that will have a MACD, a stochastics volume, including Bollinger Bands and moving averages. So that's for their benefit because they use them and they requested them, and so we add that interpretation for them as a whole to have more common indicators for the masses. But for me personally, I don't use them on a regular basis, and I only look at them on occasion for specific setups where there's divergences, positive or negative divergences, where I'm thinking there's a turnaround, and I'm going to confirm that obviously with candlesticks at all times. Does the hammer breakout strategy have any statistics in it based on? I don't believe so. I know that we have one strategy that is we call it bouncing ball, that we use hammers specifically, and there's not so much statistically as more historically. It was designed based on what had happened historically. Paul had figured that out many years ago. He's the current president of the company, trading hammers, not exclusively, but certainly as one of his strategies. And so, again, statistics, if you go by hammer alone, I don't think the statistics will necessarily be all that good. It's, again, the size relative to what's happening before. And as I showed you, if there's confirmation, then the statistical probabilities are much higher. If the force is larger, the candle is larger, and it occurs following a large sell-off and or at a support area as well. So you could run all kinds of statistics and make them look as good as you want them to, just like the fund managers do with their accounts. So do you use multiple time frame analysis? Is it necessary? Yes, I do. And is it necessary? I think it is, because I think you need to get the sort of the 10,000 foot point of view of what the trade, or at least what the landscape looks like, right? You want to get an idea of the trend at the time, and then consequently then move in closer. So I'm looking at a setup on a particular time frame. Let's just say I'm looking at a daily chart, and I see something that I like. I'm going to bump up to a weekly to see what's really going on there, and I'm going to probably drop down to a 60-minute chart to refine my entry price as things are ticking at a faster rate. So yes, at least 3, if not 4 time frames based on perspective, but also precision entry as well. So I think it's necessary. I believe so. Are we on an overall up or down move here? I'm not sure where here was, but if that was based on maybe the markets that currently right now, and obviously the overall long term is up. Depends on your perspective. If you're looking at a 5-minute chart, I'm not sure what that looks like. If you're looking at a daily chart, yes, we are still an uptrend in the indexes. Weekly, clearly we still are. But again, it depends on the perspective and the time frame that you're looking at. Highest probability candle setup. With the thousands of stocks, how do we find the trading opportunities? Well, a couple of things on those questions. I wouldn't say there's any true high probability. So there's certain ones that are the most, hammers, for instance, bull sashes, piercings, bullish engulfings, separating lines. Those are all the strongest reversals on the bullish side, and then just the opposite for on the bearish side with dark cloud covers, separating lines, shooting stars, etc. Those are the most common ones. It's all going to be, the probability is going to be based on the candle pattern, the force of that candle pattern at the time relative to previous action, but where and what's happening. Is there an indicator and or a support resistance that's confirming that pattern at the same time? That's where your probability starts to go up, is when you start to combine those things together, okay? So I follow the hammer. I've mentioned the hammer followed by inverted hammer. Could you explain the clue? Yeah, it's showing the lower shadows and the size of the old range of both of those was telling you that there was a battle between buyers and sellers at that exact level, but that they were continually trying to push price up at that level. The buyers and the bulls were trying to push price up based on the configuration of those candles at that time. Yeah, thanks, Alex. I don't think I'm going to actually repeat what you said there, but I certainly appreciate it. I certainly enjoy the comment. Okay, so can you briefly mention how to manage stop losses? Well, I can't do that briefly because there's far too many strategies for that. Discount we already talked about. Do you go over, let's see here. think that's about it. I think I may have to take some of these other eggs. So you tell me, Jeanette, if I should be answering more because I know I'm over the time at this point. I don't want to carry on.
Well, why don't you go ahead and take one more question, and
Okay.
you can repeat your link, and then we'll go ahead and switch to our next speaker.
Okay, let me see what I can possibly answer here. So what's your prediction for the Dow until year's end based on, well, I don't have a prediction. Right now they're at a resistance area and they're looking bullish still in terms of a pattern, but I'm watching carefully to see if this level is actually going to confirm resistance or not. So I'm sitting still right now at this level to see how the days progress next week with the volatility, as I mentioned, with the fact that we finished the week, month, and quarter at the same time, volatility tends to pick up. And when I start looking at the VIX, which is the fear index, the VIX looks to me like it's ready to pop pretty aggressively to the upside, which means markets are likely to come down. So that's what I'm looking for to see if it's going to happen. I've not made a decision yet, but that's the anticipation that I'm currently looking for in the next several days. All right. So with that said, thank you very much. I appreciate everyone's attention, and thank you, Jeanette, and everyone else for having us on this very, very nice special event.